guys, welcome back. Last week, the video was about whether or not we can become rich overnight. If you didn't get a chance to watch that video, it is strongly recommended that you do so. This week, we're going to be going over 10 money rules that I follow personally to make sure that my finances continue to flow smoothly. Now, keep in mind that you may not be able to follow these rules, but it's something that you can always strive for if you eventually want to become financially independent in the future, or simply you just want to improve your finances over time. But I can tell you personally, it's something that's taken me years to be able to achieve. So even if right now you feel like you cannot attain these goals, please don't feel discouraged, because as long as you're making financial progress, as time progresses, you will be able to attain at least some of these goals, if not all of them. So let's get right to it. The very first one is I always make sure that I live below my means. Now, I'm very aware that it's easier said than done, but it's definitely possible. For as long as I've been working and earning an income as an adult, I've always tried my best to make sure that I spend less than I earn in any single month or throughout the year. And it does take a great amount of discipline to be able to do so. And of course, you also have to have the income. If your regular fixed expenses are currently so high that it's difficult for you to be able to live below your means, some changes will have to be made, whether it's about changing jobs, possibly getting a raise, or getting a side job, just to make sure that you can live below your means. Because for as long as you're spending more than you earn, you will never be able to make financial progress, because for you to make financial progress, you have to have excess income to either save or to invest for the future. And it doesn't matter if you're making $50,000 a year or $200,000 a year. If you're constantly spending more than you earn, you will always have money issues. Now, the second money rule that I follow is I always make sure that I have an emergency fund. Now, emergencies are exactly that. They're emergencies. They're unexpected in nature. So you never want to be in a situation where you incur expenses, but you have to go into debt to be able to cover those expenses. For example, using your credit card because you don't have the funds to pay for it outright. And that credit card may have a 22% interest rate on it, which will cause you to divert money to pay interest on the credit card, money that could have been used for something better and more productive. So I always make sure that I have an emergency fund to cover unexpected expenses, like a deductible, for example, that I may have to pay after having a car accident, or a deductible on my homeowner's insurance. If you make sure that you always have an emergency fund, you will be able to avoid going into debt every time you have an unexpected emergency. And number 3, I make sure that I invest at least 20% of my gross income. Now, it wasn't always like that. And as I mentioned earlier in the video, if you are not at that point yet, it is totally fine. It's not something that's going to happen overnight. But if you keep making progress, increasing your savings rate consistently as your income increases, then eventually you may be able to get to that point. And by saving or investing a percentage like that consistently, it will ensure that you remain financially stable and that you are able to create wealth over time. Now, the fourth money rules that I follow is that I always make sure that I pay the entire balance on my credit card. For as long as I've been an adult and using credit cards, I've always made sure that I do not add transactions to my credit card that I will be unable to pay for at the end of the month when the credit card statement gets made. So I always make sure that I use my credit card just as a convenience or protection when you're incurring certain expenses or buying certain services, but I don't carry a balance from month to month. Therefore, I don't put myself in a position where I have to pay interest on that credit card every month. And just like me, I'm sure that you work extremely hard for your money. So it's very annoying and irritating that you have to pay all of this money in interest on your credit cards. So for me personally, I try to avoid that at all costs. Now, my fifth money rule is that I try to avoid consumer debt. So what is considered consumer debt? So consumer debt is anything like credit card debt, the loan that you may have on your car, or it can be student loans. And because I despise having consumer debt so much, I made sure that I paid them off as soon as I possibly could. And that includes my car loan, not carrying a balance on my credit cards, etc. Whenever you have consumer debt and you're financing that debt, you're essentially paying passive income to someone else or to a bank. I want my money to work for me. I want my money to be invested and create passive income for me. Now, the sixth money rule that I follow is that I always make sure that I track my expenses. Now, it's not being done as I used to do it when I had tens of thousands of dollars in debt. but I still make sure that I know exactly how much money is coming in and how much money is going out. Especially if you're in debt and you're trying to get out of debt, it is vital that you track your expenses, and that's how you can divert your resources, your financial resources that is, to wherever those resources need to go to be used in the most optimal manner. Now, my seventh money rule is that I'll always make sure that I am properly and adequately insured, which means that I have insurance for virtually anything that could potentially wreck my finances. And that includes health insurance, auto insurance, homeowners insurance, dental insurance, life insurance. Like I said, anything that could potentially wreck my finances, I want to make sure that I'm adequately insured for that, because we truly do not know when any catastrophic event may occur. And especially if you're trying to improve your finances and create wealth over time, it is important that you be insured adequately so that you can protect your assets. Now, the eighth money rule that I follow is I try to make sure that my mortgage payment on my primary residence is less than 30% of my gross pay. Now, the rule of thumb is to have your mortgage payment be 28% or less. And the reason is obvious. It is to make sure that you don't end up being house poor. What that means is you were able to purchase a house, you are able to make the payment, but after you make that monthly mortgage payment and any other fixed expenses that you have virtually nothing left at the end of the month. And if buying a house means that you will be house poor, meaning you will be constantly working to pay off a mortgage that you can barely afford, then you shouldn't be owning a house. It's truly not worth it at that point. And for that reason, personally, I make sure that my mortgage payment is less than 30% of my gross pay. And by mortgage payment, I mean the payment that I make to the lender that includes principal, interest, taxes, and insurance. And using a simple example to demonstrate, so if I make $5,000 a month, I would make sure that my mortgage is less than $1,500. Now, the ninth money rule that I follow is I always pay myself first. And if you've watched my prior video regarding paying yourself first, you know exactly what I'm talking about. So before anyone else gets paid, when I get paid, I make sure that a percentage or part of my money is invested and or is saved in a savings account before anyone else gets paid, meaning before I pay any other bills. And if you're not at that point yet, even if it's as little as $50 per paycheck or as little as $100 per month, please get in the habit of doing that and do so consistently. And I guarantee you, you will be happy that you did. And now the 10th money rule that I follow is when it comes to money, I tend to buy anything that I buy brand new and I keep it forever. Now, I don't literally mean forever, but I keep it for a very long time. For example, if I buy a car, I would buy it brand new and I would keep it for at least 10 years. So if I buy a house, I buy it brand new and I would plan on staying there for at least 7 to 10 years. And the same applies when it comes to smaller items. If I buy an iPhone, I keep it for a few years. If I buy clothing, I keep it for a few years. So to recap, I make sure that I always live below my means. I always make sure that I have an emergency fund to cover unexpected expenses. I try to invest at least 20% of my income. I always make sure that I pay my credit card balance in full. I avoid consumer debt, and if I have it, I try to get rid of it as soon as I possibly can. I make sure that I track my expenses. I know how much money is coming in and how much money is going out. I make sure that I am properly and adequately insured in order to protect my assets the best that I can. I make sure that my mortgage payment is less than 30% of my gross pay. And I always make sure that I pay myself first. And lastly, I make sure that anything that I buy it brand new and I keep it for a very long time. So that's it. Hopefully this video was informative to you, and hopefully it was even inspiring to you. And like I said at the beginning of the video, if you haven't gotten to that point when it comes to your finances, that is totally and perfectly fine. It's something that takes time, years of discipline, patience, and hard work. And I truly wish you the best with your personal finances. So if you didn't get a chance to subscribe, please make sure that you subscribe right now below and make sure that you hit the bell button to get notified every time I release a new video. I'll see you next time. Have a good one.